Hey, good morning, everybody. Today is Tuesday, April 12th, 2016. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Let's start this morning by taking a quick look at our Spectrum Analyzer. It's important that we identify where the leadership in the market is, and to that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 19, that's a lot, came from precious metal mining. 7 came from exploration and production, 7 came from real estate investment trust, 5 came from consumer finance, and rounding out the top 5, we had steel producers and banks with 4 each. We're seeing a lot of precious metals and exploration and production recently. We're seeing a lot of real estate investment trust. These may be good places to look for leadership in this market as we go forward. Let's start this morning by taking a quick look at the Russell 2000. As we've been noting for quite some time now, I think the Russell 2000 is the key to the market going forward. And right now the Russell's struggling. It's struggling with resistance right here in the 1108 area. That resistance goes all the way back to this low back in December of 2015. Notice how we've been struggling with this area. We can't seem to get over it. I'd really like to see the Russell take out that minor resistance area in the 1108 area and challenge this resistance up here in the 1140 range. That would be bullish. See what the NASDAQ Composite's up to. But before we do that, let's take a quick look at the market. Last week we talked about a schizophrenic market. Trading yesterday did nothing to dispel that notion. Early gains turned into late losses on mixed volume. Trading was below Friday's levels on the NASDAQ, but heavier on the New York Stock Exchange, giving us another distribution day on the S&P 500. This brings the distribution count on both the S&P and the NASDAQ to 5 days in the past month. A distribution day is a session where at least one of the major averages trades at least 0.2% lower on heavier trading volume than the prior day. Distribution is a sign of institutional selling in the market, and too many distribution days in a short period of time can indicate an uptrend may be in trouble. With the distribution count on both the NASDAQ and the S&P 500 at 5 days in the past month, the count is beginning to be a cause for concern for the bulls. Consequently, Investors Business Daily's market outlook has fallen to an uptrend under pressure. That noted, our market timing model remains on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. We've been noting concern recently with the lack of names on our universal watch list. In a healthy market, we generally have between 50 and 90 stocks on the universal watch list. We currently have 36, and this is down from 37 last week. The weakness in our universal watch list indicates weakness in market leadership. Advancing Issues topped decliners by 3-2 yesterday. In spite of the recent market schizophrenia, the New York Stock Exchange advanced decline line continues to look bullish. New highs again bettered new lows yesterday, but our new high, new low indicator remains on a sell signal. Although often premature and subject to periodic false starts, the new high, new low is frequently one of the first indicators to signal a change in market direction. Of further concern for the bulls, the McClellan oscillator remains in sell territory. According to our Ramosi ratio, large capitalization stocks bettered small again yesterday. Large caps continue to outperform on a 10-day moving average basis. Bulls would have preferred to see small caps outperform. In spite of the elevated distribution count and increasing signs of market stress, we remain cautiously bullish. Traders may want to take advantage of any weakness that develops in the market to add to or tweak their portfolios. That noted, be careful, and as always, keep your stops in place. Okay, yesterday the NASDAQ Composite was down 17.2 9 points, or 0.36%. We closed at 48.33, and note how we tried to undercut support at this long-term trend line. This trend line, as we've noted, goes all the way back to the beginning of the bull market back in 2009. Undercutting that trend line would not be bullish. Trading volume yesterday was below the prior day. For you followers of William O'Neill, we are in an uptrend under pressure. We have 5 distribution days on the NASDAQ in the past month. That's quite a bit of distribution. Investors Business Daily, or the IBD, notes 6 distribution days in the past month. That's a lot of distribution and is a cause for concern. It's the reason that the uptrend is under pressure. Right now, the NASDAQ is bracketed by support at this trend line. We're going to continue to call this trend line support because we haven't really undercut it yet. And resistance up here in the 4,900 area. I'd like to see the market take out this resistance area. The next significant area of resistance would be up here in the 5164 range. We are currently on a buy signal on our market timing model, and a buy signal, as we noted earlier, indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Let's take a look at what the S&P 500 is up to. Yesterday the S&P was down 5.61 points, or 0.27%. We closed at 2041, and importantly, we held support right here in the 2044 area. Note how we traded higher for most of the day yesterday, but we closed right smack at the bottom of our daily trading range, which also happened to coincide with support. Trading volume yesterday was heavier than the prior day, giving us another distribution day. Right now the S&P is in an uptrend under pressure. We have 5 distribution days in the past month. That's a lot of distribution and is a cause for concern for the bulls. The S&P is bracketed by support down here in the 2044 area and resistance up here in the 2116 range. If we were to undercut this area, it would be a cause for concern for the bulls. Next significant area of support is going to be the 200-day moving average, which we show in red here. In black here. Our market timing model on the S&P 500 is on a buy signal. Before we go, I want to take a look at Mobileye. Mobileye is an Israeli-based developer of software and related technologies for camera-based advanced driver assistance systems. Mobileye is going to be integral to self-driving cars. They also provide technologies for collision avoidance and blind spot detection. Yesterday, Mobileye found support at its 10-day simple moving average and traded higher, closing near the top of its daily trading range on heavier trading volume than any down day in the past 10 trading sessions. That's our definition of a pocket pivot. I like Mobileye. Along with Facebook, Mobileye is one of my favorite stocks on a fundamental basis and is worth taking a look at by aggressive traders at this point. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.